Good morning, it's Harvey Jackson. Just going through the news again, and there's still lots of news about Iran and Israel, U.S. Fighting in the Middle East. The Strait of Hormuz is still controlled by Iran, and that by itself has put a lot of pressure on this market. So this clipped as close to the time as possible, but there's 6 vessels, I think, now that's been struck in the strait. So that is having crude oil take off. And when they talk crude oil over there, they're always talking about European Brent. But we'll have to see how this plays out. I still believe that there will be a continued force pressure to try to control that strait. Here's just $101 back there. U.S. intelligence says Iran government is not at risk of collapse. So, and like I've said in the past here, a regime that's been fighting for thousands of years against um, Israel is still going to continue to fight here. Oil market rises well shut-ins if Middle East disruptions persist. So they're talking about shutting down some of the oil pumping because you're at the capacity here. India retail inflation accelerates to 3.2. It was expected at 3.1, and that is before the any fuel increases, which will have an impact across the world, I'm sure. So just looking at the canola market, this trend line, it probably should be moving it over uh, and maybe just changing the steepness of that. But I wanted to watch when it broke, and it did break, and now it looks like it's actually still on an increase here as well. Here's your November timeline. I put that in there now so you can see that it's just changed the angle of the upward move. Here. Still, this previous high that we made, it seems to be still some sort of resistance on the rapeseed. $71 is the difference between European rapeseed and Canadian canola. It doesn't even pay for the freight to probably get there. Soybean oil futures still well supported. Now there was rumors yesterday that the renewable fuel program is leaked that potentially it's a 5.6 billion gallon production uh, uh, quota. So rather than the lower end at 5 billion, and it's at 5.6. So that gave the market a bit of a shot in the arm to keep going and add some strength to the soybean oil. Soybeans did get pulled up with that as well. Your crude oil is moving up, or the palm crude oil is moving up in sympathy with the soybeans for sure. So light crude, just a 5-day trend. So this is the high that we got made back in on the 6th, or the start of the week. We pulled back, but there looks like there's a trend here that it's going to be, it's got some strength again and nearing that $100 mark. So just looking back at the oil complexes that I keep showing, you get your West Texas. I could put the Brent on here too, but your diesel, your soybean oil, your soybeans, and your canola, they're all down in here. What's leading right now is still the diesel fuel and then the crude oil along with it. Brent. Here's your New York Harbor diesel fuel. So you could your 5-day trade here. We're going back up here again. So jet fuel, diesel fuel, all is going up in price. Gasoline, Canadian dollar. This is just more resilient than I thought it could be. But it, the way this is feeling right now, we're definitely going in this direction, which doesn't help our basis, but it is because we're an oil nation. That is for sure. U.S. dollar index, that one's moving up as well because they are more um, producer of fuel as well, so that you can say that they're partly petrodollar, but there's a flight to safety as well. Gold is not as in as much favor as it was before, but now it's back into the dollar money going back in there. Volatility index, so that's on the S&P, of course, but just you see that there's an upward trend here. Wheat. So here we are. Minneapolis wheat is trading right at that 644 area. Nice move up here, and yeah, it had that spike high, but I don't know if there's any volume to it. But we're definitely in this range where I would still be looking at some higher areas, probably even in that $7 mark as well. Right here where I've got the December. So if you're looking at July, I would be looking in that 690 to $7, and then for the December contract, $7 should do a futures first. Bungie, Cargill, and I'm not certain if G3 would be doing those. Here's your Kansas and your Chicago all going in the same trend, and your corn, looking at the same area to price previous highs. So if corn continues up in this trend, that would be the area that we should be looking at pricing some more. I'm not certain if it's still on the queue, but the labor force survey is this Friday for Canada. That's all I have here.